U.S. health insurers overall have been able to adapt to the pressures created by the Affordable Care Act, while other product lines, including Medicaid and Medicare Advantage, remain profitable. These and other factors have all added up to a more stable marketplace. With us to talk more about that, an AM Best Annual Review Preview report on the health insurance industry, Senior Director Sally Rosen and Associate Director Doniella Pliss. Sally, the report notes that health insurers have seen an improvement in profitability and risk-adjusted capital. What's driving that?
There's been a couple of things. First of all, the health insurance industry as a whole has remained profitable since the implementation of the ACA, the full effect in 2014. A couple of things. There's been lower medical cost trend, which has helped. No real big blockbuster prescription drugs have come to market in the past year or so. I think the last year we saw some was 16. We've also had no health insurer fee in 2017. That not only is a positive for bottom line because it's not tax deductible, so it affects net income. The other thing is for Medicare Advantage, carriers tend to absorb it because of the price sensitivity of the market. So without it there, it actually was a benefit in 17. Additionally, the ACA exchange business has continued to improve. We've had several years of higher rate increases. We've seen stability in the membership, and that is a positive for a couple of things. First of all, we're not seeing as many new members come on, and in 14 and 15, we saw a lot of new members come on, high pent-up demand for services, high utilization. The other thing is the longer individuals are on a plan, especially individuals with medical conditions, insurance carriers can enroll them in disease management programs to try to keep them, their medical condition contained and stable and avoid medical hospital admissions or emergency room visits. In regards to risk-adjusted capitalization, the large premium growth that occurred in 14 and 15 has subsided, and that was largely the 14 and 15 was due to the ACA exchange members and the expansion of Medicaid. As that enrollment premium growth has slowed, capital has earnings have improved, and it has resulted in improvement in risk-adjusted capital.
Is this sustainable?
It is sustainable. I think there's a couple of things in 18 that could have some impact, but we do think the industry will remain profitable. The health insurer fee does return in 18, so there's that impact. Additionally, we do have the unknown effect of the 2018 flu season. Everybody is hearing, it's all over the news. It's one of the worst that has been seen in a long time. There could be some pressure on Medicaid rates as these contracts renew. The rates in 14 and 15 were initially set higher, again, because of the pent-up demand from the new members. However, we do expect the industry to remain profitable. However, overall, we think revenue growth will be challenged. We're not seeing Medicaid expanding anymore. Commercial employer group segment, the enrollment has been relatively flat. It's just carriers taking from one and another. There's not huge enrollment growth there going on, and the ACA exchange membership is flat. The only thing that truly has membership growth is Medicare Advantage.
There seems to be no end in sight to rising expenditures. Do carriers have any influence on the cost of procedures?
Carriers always negotiate. It's part of, they negotiate with providers all the time. That's been going on for years. Some of the things that have changed is there's more value-based, which is an outcome-driven reimbursement programs with providers, and that looks at the outcome. So, how many people, it looks like, people readmitted, being able to keep people out of the hospital with serious medical conditions. In addition, we have narrow networks that carriers are building, so they're lower cost networks as an option that they're offering to insureds and employers. And we're also seeing vertical integration. We're seeing an increase in this where insurers either own providers, or we have hospital systems and provider systems that own health insurance plans, and through that they can achieve integration and better cost containment.
Doniella, President Trump signed an order that included the expansion of short-term medical insurance policies and association health plans. What are some of the positives and negatives of that?
On the short-term medical plan side, for the carriers that can offer these products, the positive is that this is a limited benefit plans that can be medically underwritten, so there is a risk selection. And for the last couple of years, the experience in this plan has been very positive for carriers. The medical loss ratios tend to be low. and that these plans tend to be profitable. And there is a lot of growth expected to come into this segment as more individuals, especially healthy individuals, are looking for lower cost coverage. On the negative side, though, that can further erode the risk pool for individual exchange business. However, there is an expectation that this migration is not going to be that big, because currently the individuals that make a decision to pay high rates for their ACA plans tend to do it because they need this plan that provide more comprehensive coverage, rather than because they don't want to pay a penalty, because the penalty at this point is relatively low compared to the cost of coverage. For the association health plan, that's a little bit different. Those plans are not going to be medically underwritten, so you can have both healthy and not that healthy individuals in this pool. But on the benefit side, these plans don't have to comply with ACA benefit requirements. So carriers can pick and choose what they cover and adjust it to the needs of the consumer, and therefore offer lower cost coverage. Again, it's all about offering lower cost coverage and trying to get to meet the market demand and to make these plans profitable. On the negative side, though, again, similar to short-term medical, that can erode individual pool, but not only individual, it also can affect small group market, because association plans that can offer skimper benefits can attract some small groups that are currently in the small group market.
Now, the industry appears to be on solid footing. Is there anything on the regulatory front, however, that could upset that footing?
2017 illustrated that repeal replace is not an easy thing to accomplish, and considering the midterm elections of 2018, it's very unlikely that large-scale repeal replace will come through in 2018. However, what seems to be going on is that Washington is implementing incremental changes that impact ACA step by step. The good thing for the carriers, though, is that a majority of these changes have not been effective immediately, and the industry had sufficient time to adjust. 2018 can become a year when Congress is staking on trimming down the entitlements, and if that happens, that can negatively affect the prospects of growth in the government programs for medical carriers. However, it's unlikely to be a near-term event.
Does the CVS-Aetna merger tell us anything about where the health insurance industry is headed?
After the blocking of Anthem, Cigna, and Aetna Humana mergers by the Department of Justice, carriers are forced to look for alternative solutions. And it is widely acknowledged that the large-scale mergers of medical insurance companies are probably not going to happen unless their lines of business are complementary. What CVS Aetna can accomplish is a vertical integration that Sally mentioned before, and this vertical integration provides opportunity to deliver lower cost coverage, what everybody is trying to accomplish. And we expect that more carriers will have increased interest in that kind of approach, whether it's on a larger scale, like CVS Aetna, or on a much smaller scale, which can be local or regional.
Thanks, Doniella. Thanks, Sally. You can view the full report online at ambest.com. For AM Best TV, I'm John Weber.